it would be safer and easier to borrow money, and the interest rates would presumably go down and be more stable. And what are you going to do with that money? You're going to buy things probably within DeFi or within crypto. So more liquidity means more money going into other assets of the crypto complex. So that probably.
So you're saying it'll pump
it'll
my
probably
bags.
pump your bags. Yeah.
Welcome back to Token Narratives with Bitcoin.com, where we discuss the biggest stories shaping the Bitcoin and cryptoverse. I'm Graham, your loyal host, coming at you from my office in Okinawa, Japan. Fun fact, Okinawa is the home of Karate Kid. With us, we have David of the Bitcoin.com news team, calling in from his padded cell with scribbles on the wall, located somewhere in the sprawling suburbs of Tokyo.
It's a nightmare.
It's a nightmare. Not with us this week is Corbin, who is in Canada. Him and a few other people from the team were at the Blockchain Futurist conference in Toronto, which seemed like it was quite a success. All right, let's get to it. Starting off with our usual gut check. How do you feel about the markets, David?
To be honest, I haven't really paid that much attention to the markets this week. I would say then that to me is bullish because it hasn't been remarkable enough to pay attention to. I see that we've kind of chopped around and we're nearing what I would consider the lows of this range, right around 56 to 50, 55. So we'll see if it falls below this, and then if it falls below this and stays below, then you start to maybe worry about something in the short term. But my guess is it'll maybe bounce from here and kind of go up to the top of the range kind of deal. But yeah, very unremarkable week of action. What about you? What do you think?
Yeah, I would echo that. I do have a question for you. Did you buy the dip?
I didn't. I was it was terrible actually. I went to Taipei for Asia Block something ABS Summit, Blockchain Summit.
Asia Blockchain Summit.
Yeah, last week. And as I was going last week, like I got ready on the weekend and then left. The big puke happened while I was going to the damn airport. And so I could not capitalize on this. And then while I was at the conference, I just didn't have, I don't know, I was too lazy or didn't have the brain power to think about buying stuff. So no, I didn't capitalize on it. I think I'll get another. I was paying attention to what people were saying, the people that I follow, and it seemed like just like the price action that I'd have another chance, maybe another bite at the apple, and I think that might actually happen. I don't know. I'm looking right now. If it dips a little below here, I think I might start to deploy a little dry powder. But what about you? Did you buy the dip? Was that Monday?
I deployed a tiny amount of capital just to make myself feel better.
Was it what was it? Majors?
I'm going to be honest.
I'm assuming?
Yeah.
Bitcoin, ETH.
I'm going to be honest though. I actually bought the tiny dip before the real dip. So then I was like, I was underwater on that. And then so that made me feel less motivated to buy the actual dip.
Yeah. That 48.
That's how
when it kind of
that's how they get you.
When they touched 48 or broke 49, man, that I absolutely would have bought there. And I think if I get another chance, I'll buy there again for sure. That seems.
Well, you might get another chance because it looks like $593 million of Bitcoin that's owned by the U.S. government from the Silk Road stash has been moved to Coinbase Prime. This is breaking news from Bitcoin.com. So when they move their coins to Coinbase Prime, that generally means they're going to sell them, doesn't it?
Yeah, I mean that's usually the play. What the hell's going on here? Are these people just? Is this just the Dims giving an FU to crypto and maybe the Republican platform? I think this is crazy. I think this is absolutely insane.
Let's talk about that for a minute because I noticed that there are some rumors of VP Harris's economic advisors being appointed, and they are not crypto-friendly people. One of them was, I forget the name, but a person who's basically behind Operation Choke Point 2.0, an advocate of that, and an Elizabeth Warren acolyte. Is sort of being tapped potentially for the Treasury Secretary. So that does not bode well, and for crypto, it would seem.
Yeah, I mean, I guess. Well, we'll get into this more later, but I didn't pay that close attention to crypto this past week, and the reason being is I was paying a lot of attention to U.S. politics, and I think there's been a lot of action there, and it obviously has pretty big implications for crypto, at least in the midterm, right? Probably not the long term. And so, I think that Harris and her platform, they have a very strange relationship with crypto at the moment, right? It's like it almost seems like it's inverse correlated to how well they're doing, right? Or the perception of how well they're doing, right? Like, you go back to when Biden was running, and there was a pivot towards. I think there was a pivot from the Dems towards crypto because they didn't want this to be like a wedge issue between Democrats and Republicans. And then now that Harris seems to be doing better, it almost seems like they're like, yeah, well, you know what? F those people. We don't need their money, their super PAC money, which is like one of the. Isn't it? What's the stat? Like crypto funded super PACs are.
Yes, the Fair Shake PAC is the biggest or second biggest.
And then there's
political
two more.
Action.
There's two more under.
Right.
I think altogether,
a lot of money.
Yeah, a lot of money
for lobbying.
So
crypto.
why
and
why make enemies with that? It just seems so. It doesn't seem politically astute. If you're just going to be cynical and say they want to win, I don't know.
Yeah, well,
bizarre.
Supporting what you're saying, Polymarket has the odds of Harris winning at 54% versus Trump, who is 44%. And it's been down only since July 6th, 17th, which is when Trump got shot in the ear.
What a crazy thing.
I'm just realizing here, like, actually, it would have been a really good contrarian bet to put some money on Harris down here when she was at 6%.
I think I might dabble in. I think I might dabble in the contrarian bet now, dude. I'm gonna wait for the
Yeah, exactly. I was thinking the same thing.
yeah
Put some money on Trump, right?
yeah because I think what I heard from the reporters that I follow, for example, I love Matt Taibbi. I think he's amazing, and I suggest anyone and everyone to follow him. Subscribe to his Substack if you want, which I do. And between him and Walter Kim, they have God, how many decades of presidential campaign experience. Anyway, some of the things that they've heard is that perhaps Trump's team is waiting for before they like counterpunch. They're waiting for the Dems to get through with their what's it called? DNC, whatever it is. I forgot the name.
Oh, the convention.
The convention. There you go. Thank you. And because that's going to be kind of peak media attention for Harris, right? Up to that point, right? She's accepted the nomination, and it's a whole thing. Right. So no point in wasting any of your ammo before that, because you'll just be like pissing in the wind. And so I hope then that the counterpunch after that will be kind of I imagine that might even those odds. So yeah, I think I'm probably gonna get on Polymarket here, and not financial advice at all, but I feel like those odds are way out
I
of
might make a bet.
way out of balance.
Yeah. But what do I know about U.S. politics?
I mean,
my crypto bubble's full of Harris is empty. Harris, yeah.
Everyone I know,
what she's talking about.
Everyone I know in crypto, to every single person, either at work or at the convention I just went to last week, they were all saying like a mantra, Harris is going to win, Harris is going to win. And it seemed to me like that they were trying to temper their dreams and hopes, right? And I still think that I think Trump probably has an advantage, but I don't know. So anyway, I'll bet on this just from purely a monetary standpoint. I think that 44 to 54% is out of whack.
All right. Let's move on to some other news this week. So, looking at some bullish stuff here. Just a minute. Yeah, the Glassnode thing. Glassnode, Diamond Hands. Where's Diamond Hands? Here we go. Glassnode's latest report.
I like that picture.
Yeah, it's awesome.
Is that Jamie's? Shout out Jamie. That's an awesome pick.
This is AI generated?
I imagine so, yeah. I can ask him.
It's a good prompt.
Yeah, he's
still got a prompt. He's a prompt engineer.
He's got it dialed in, man. This guy.
Yes, this guy. According to Glassnode's latest report, Onchain data reveals that following months of significant distribution pressure, the trend is now shifting back towards accumulation for Bitcoin. Specifically, over the past 3 months, approximately 374,000 BTC have apparently migrated back into long-term holding status. So if you look at this accumulation chart, where's this? Yes, here, I believe. Is this it? Yeah. Zoom in a bit if we can. The accumulation trend score hit a perfect 1.0, signaling that big wallets are on a hoarding spree, and these hodlers are playing the long game, ignoring the ups and downs and betting on a brighter and more profitable Bitcoin future. On-chain data bullish for Bitcoin.
Can you give a little color on that? What does that mean?
The accumulation trend score?
Yeah.
What does it mean? It means people are accumulating. Somehow they've managed to, with on-chain data, come up with these metrics where where the holders who have held for a certain amount of time are then identified as long-term holders, and it's likely that they'll continue holding. They're going to distribute significantly later. So that's how this is defined.
Gotcha.
If that makes any sense.
Yeah, no, it makes perfect sense. Yeah. And so then these long-term holders are gobbling up available Bitcoin then.
Yep. So everything is going according to plan.
Yeah, I agree.
Bitcoin reserves. This is another data point to support that. Bitcoin reserves on exchanges have hit a 5-year low, with 5.69 billion withdrawn over the last 30 days. Here we have a chart of Bitcoin exchange reserves, and it is down only since early July.
Yep. And you might say then why is the price kind of ranged or been slightly down during this time? And it's because there could be a lot of reasons, but basically we've had bullish selling, right, by the German government and other participants, probably some of the Mt. Gox people who got their Bitcoin recently. There's probably selling pressure from that. But when the marginal seller kind of disappears, you could really see an increase in price, right? A repricing event, where I think what this data is trying to show you is that the price and the availability of sellers is kind of becoming is kind of breaking correlation, right? So it could be the case that once these sellers are exhausted, or when they don't want to sell at this price, basically, it'll reprice higher quickly, and you've seen that in past cycles after the halving, right? Yep.
All right, let's talk about.
Well, just on a one tangent of this.
Yeah.
Do you have? I don't know if you have any news from the Ethereum ETF flows too. Oh, you do. Okay. Well, I'll bring it up then.
You want to talk about that?
No, go ahead.
Well, I just wanted to. It's always fun to get the price predictions of crypto influencers.
Absolutely.
And one of my favorite influencers is Arthur Hayes.
Yep. Shout out Arthur Hayes. He has a great blog. He has a really, really good blog.
Oh, it's wonderful.
Yeah.
And Arthur Hayes, of course, the man behind BitMEX, which was a revolutionary product in the first really big cycle, 2017 cycle, allowing people to perpetually long and short Bitcoin and crypto.
And to do so at insane leverage, right? Like just insane
leverage, yes.
100x.
Yes. Many a degen trader was liquidated.
Me. I was.
Yes, I remember.
Terrible.
And, yes, and actually, I remember you trading on your mobile phone between.
I know. What an idiot! what an absolute idiot!
All right. So, a fun fact I just wanted to say about Arthur Hayes is that he's an avid collector of plush toys.
Seriously?
So apparently he he lives in Asia, travels to Japan regularly for the snow, and packs a separate suitcase full of plush toys on his adventures. Yes,
I'm guessing he's up in Hokkaido for the powder snow.
Yes, and I believe Thailand the rest of the year.
Hella skiing, I imagine too.
Yes, living the dream.
Yeah.
So, all right, he's predicting that Bitcoin is going to hit 100K by the end of this year, and he's got his eyes set on 1 million at some point in 2025. Basically, he's saying the U.S. Treasury is going to pump so much liquidity into Bitcoin, and it's going to be, quote, glorious. So that's fun. I hope that happens.
Yeah,
Obviously.
I've listened to some macro financial people this past week, and they seem to think that could also be the case, especially with the elections happening, and then when the new president comes in, whoever it is, they'll probably want to start some kind of economic plans that require the creation of a lot of new debt. So
yes, that's the theory.
Mm-hmm. I think that's probably the highest chance, like the biggest likelihood. I was hearing, what was it? Some macroeconomic guy. What's his name? George Robertson and Mel Madison. On a podcast, they were talking about how they think the S&P will go to a 6 and 7 handle, right? So 6,000 and 7,000. And if obviously
those numbers are meaningless to me. What are we at now?
5. What are we at? 5.
Okay, so that's like $10 trillion.
It's huge. It's pretty big. Going up that much is quite enormous. And if the S&P skyrockets there and then crashes, then Bitcoin is even more beta, or crypto is even more beta than that, and we should go up even like an insane amount more.
Didn't in the dip, in the crash, the Black Monday event of last week, didn't the NASDAQ or whatever it is drop market cap equivalent to the entire crypto space like in 10 minutes?
Yeah, something like that. Yeah. Yep. Yes. So yeah, we're right now the S&P is around 5,500, almost 5,600. It dropped to.
What do those numbers mean?
Well, the S&P is just it's kind of an average of all of the stocks that are within the, what's it called? The market.
Yeah.
Right. So I'm looking at the S&P minis. And so, yeah, it's an arbitrary number, but it's just kind of the overall value for one share.
Yeah.
Blah, 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 of the company.
Do you know what the approximate market cap of the S&P is at 5,000?
At 5,000, let's see. Let's see. Right now, as of August 10th, the market cap was 45.7 trillion.
Okay. Yeah. So if we go to 7, it's another like 10, 20 trillion.
Yeah, something like that.
7,000 would be 10, 20 trillion. So 10x the entire crypto market cap. So yeah, I think it seems likely that a lot of that would also spill over into crypto land.
Definitely.
Pump in our bags.
Also, if even more so, if there's a favorable new administration, either way, for crypto.
Yeah.
Definitely could see it.
Let's talk about ETF flows for a moment, shall we?
Yep.
All right, let's see if I can find that. Yes. Digital asset investment products witnessed a surge of inflows amounting to 176 million, with Ethereum leading the charge by attracting 155 million in inflows, and the total assets under management of these digital asset products rebounded from 75 billion to 85 billion. Let's look at some of the charts here. So here we're looking at the total Ethereum spot ETF net inflow chart since launch. A lot of negative days, but overall we are at 7.28 billion assets under management in the ETH ETFs in the US. By comparison, the Bitcoin assets under management is 48 billion. And here's the inflows and outflows chart since inception. So more green than red, obviously.
And I guess the
I find
idea
these charts to be quite interesting.
Yeah, what site is this?
Coinglass.com.
Oh, Coinglass's stuff. Nice. I have to go and take a look. But the basic idea is if for the ETH ETF is if it follows the Bitcoin ETFs, what the Bitcoin ETF did is that when the outflows taper off, peter out, and we start to have positive inflows, which happened with Bitcoin, I think, how many days after? It's like
3 weeks.
3 weeks.
Yeah, 3 weeks. You can see here it launched January 12th. We had outflows, and then that sort of ended around the end of January. 2-3 weeks, yeah.
Yeah, and then
then we had inflows for a month.
Yeah, and the price appreciation was good during that time. Was it like 90%?
You can see the price appreciation. Yeah, so from end of January to mid-March, Bitcoin was up only.
Yeah.
As the inflows, basically in line with the inflows.
Yeah. And so I think you saw something like a 90% price increase during that time.
Bitcoin price was just under 40K at the end of January, and by mid-March it was 73K. Now looking again at the Ethereum chart, it's actually been not as outflowy as you would expect.
Yeah.
Right?
Some people were trying to speculate on that. Why have the outflows been less severe as Bitcoin? And one theory I heard was that the people who got into Bitcoin, you're talking about people in the Grayscale trust, right? So people who got into Grayscale.
These are where the outflows are coming from.
This is where almost all the outflows are coming from, is from Grayscale. These are people who got into Bitcoin through Grayscale quite early, and they're realizing some of their gains, right? Long-term gains. People didn't really get into ETH in the same way, right? So the people who got into the ETH, ETH, I think what is it called? ETH, Grayscale Trust.
Yeah.
They were kind of more, probably closer to real market participants, really trying to maximize on the discount, not as interested in realizing their profits, probably, maybe. And so that could be one reason why the outflows have not been as big as Bitcoin's.
That makes sense. Yeah, the ETH trade was. I heard a lot of chatter about the ETH, people getting into ETH simply for the discount, because you could get it at a price lower than what ETH was, the actual ETH price, and then once the ETFs launched, you could get out at the ETH price. So it was free money.
Yeah. And
basically arbitrage.
Yeah, arbitrage. And basically you're talking about people who are closer to crypto market participants. Whereas a lot of the people who are in Grayscale, obviously there's a lot of people who are crypto market participants, but not as much as you'd think, right? Because they could just buy Bitcoin and custody it there. So there's a lot of people who, a lot more people who just viewed it as simply as a trade. Traditional market players, maybe. Anyway, that's just one theory.
Hey, yeah. Go
Well,
ahead.
the second thing that I was going to say is, if you look again, this is all from other sources. I haven't haven't looked at that myself, but um, if you look at what ETH, at what Bitcoin, the liquidity of Bitcoin, available Bitcoin, when the outflows stopped and the inflows started to dominate, versus the availability of ETH right now. ETH is a lot more inelastic, right? There's a lot less liquidity, and this basically means there's a lot less ETH around for people to sell, and so you could see a much stronger move up if inflows begin.
All right.
Yeah.
Now, what's going on? I mean, why is there less ETH available? Is this because people are just staking ETH and restaking and liquid restaking, triple restaking? I don't know, whatever it is. Is that why?
Yeah. I think it's a number of reasons. My personal opinion is that's probably the biggest one. I heard some analysts say that before, but the analysts didn't go into the details of it. They didn't. I mean, they didn't look into it themselves. So that's my guess, Graham.
I don't really get it. I don't get why that means it's not liquid, because it's trivial to unstake your ETH and sell it.
Yeah.
Isn't it?
Well, I doubt that they would sell it like that. I think they would just probably sell the staked version, maybe, right? If they really needed liquidity, but really, why the people who have staked ETH, right? You look and across all ecosystems, right? The people who stake these
They're hodlers. They're long term. They're in it for the
yeah,
long haul.
they're like the closest version of institutions that we have in crypto, right? They're staking like millions, tens of millions, hundreds of millions of dollars of worth of this token, and they're considered the smart money in the space, and I would agree with that, right? They don't want their tokens diluted, so they're making sure that they're getting emissions, right? And this is the one way to do it. And in fact, they get more than their worth of emissions, because the people who don't stake, all those people who don't stake, those emissions are going to people who do stake. And so,
Yeah,
I guess they would have a reason to sell if the price goes up, but really, why would they? Right? Why would they dump a whole lot unless you're like, I don't know, jump crypto and you're getting out of the space? But that probably just means that the ETH would be transferred to stronger hands, I would imagine, because I mean, you could get quite a lot of money off of the emissions, I imagine, right?
yeah,
And the fact that Bitcoin doesn't have anything like this, it could, on balance, just reduce. I mean, if you compare it to ETH would have a reduced amount of liquidity in the system. But I mean, I think you're right. Like, if it probably isn't as crazy as it looks, but I still think it does have a major effect, right? Like, you're getting paid to hodl your ETH or Solana, right? Solana does this too, and
yeah,
why not just keep it there?
yeah. All right. Can we talk about this for a sec? I don't know if about you, and I'm kind of a gut, shoot from the hip, gut check sort of trader
All
guy
right.
here. I'm not really into the technical analysis very deeply, but one thing I've noticed over the last week or so is that Ethereum seems to be down less than Bitcoin and Solana for a change. So it seems like we've hit rock bottom on ETH sentiment, and we may be on the up take there, on the up swing.
Yeah, I mean,
and then why is Sol down more? Is that because
I think it's because it's
I heard
held
some
up stronger.
rumblings about Sol?
I think it's Sol has held up much stronger than ETH for the past I don't know, month, maybe 2 months, right? And so it makes sense. It makes sense that if you're going to finally see some ETH strength, then people might be rotating out of Sol a little bit. I still think here's the thing though that I was thinking, Graham, is pretty much every trader that I listen to has said some version of this, which is during downtrends or during dumps, you always want to make a note of the coins that go down less or are more resilient, right? And you don't want to you want to buy those.
Scale out of those.
No, you want to buy those.
Oh,
yeah. It's slightly counterintuitive because you think, oh, but it hasn't gone down as much, so it'll.
Yeah. Oh, yes, yeah, because it. Yeah, sure.
But actually, apparently, it's that the ones that are resilient will be even more will perform even better and
perform on the upside when it bounces.
So Sol has been way more resilient than ETH during this past month or two or whatever the time frame is if you look at it.
But not now.
But I mean,
so now it's switched.
Yeah, but that's just that's in the tiny short term. I still wonder because I have very strong feelings about ETH. I think ETH is set to outperform eventually. I think it'll go wild. I think. But
yeah,
it has performed worse than Sol. It has been less resilient. If you make
for months and months.
Yeah, exactly. So I mean, those are probably my two biggest bets is ETH and Sol. But just the ratio is something that I've thought a lot about the past month or two. I'm still heavier ETH than Sol, but I don't know.
Interesting.
Yeah. What about you? What do you think?
All right. I don't know, man. I think it's safe to have Bitcoin's ETH and Sol at this point. And if you try to go much further out on the risk curve, you're asking.
Yeah, I've gotten smashed by having some positions out. Yeah. Absolutely.
I mean, I've been so tempted for months to buy a ton coin, but I'm just like, nah. I already missed that boat. And as soon as I buy, it's going to start underperforming.
I think Tone has a crap ton of room to run. I saw that it was down the past week or two.
Sure. Yeah.
But again,
it's
same for me.
16 billion market cap.
I think the
upside is It could get to Sol 66. But that's only like a 3x if it gets to Sol's market cap, right? It's not that much. And then on the downside, if things shift negatively, ton's going to go from 16 to 1 billion.
Did I tell you?
So it's not, to me, the risk reward is not really there right now for ton.
What's it? The ABS, the event I went to last week, ton was everywhere, dude. Yeah. They basically sponsored the event. They had this giant, huge paneled.
Yeah, so they're hemorrhaging marketing money.
Well, no, they really didn't have a presence at Kyoto IBS, and they didn't really have a presence in a big way at EdCon either. So I actually made comments about it. I was like, where the hell is Ton? I mean, see all these other things there, but man, did they splash out for ABS. I wonder, is it WebEx is next week, I think? I'm curious to see if they're gonna have a big presence there. My thing is, I think it's good that they're not splashing money on every single event, right? I think it's a good sign that I've only really seen their presence at one, so they're being a little more picky. But who knows?
Yeah. All right, let's move on, shall we? We've got 20 minutes left here. Do you have some show and tell?
Well,
something you'd
no,
like
I have
to bring
some
up?
topics that are just kind of a smorgasbord, a la carte kind of thoughts that I've had for the past week or two, and I just wanted to share them. I'm going to be writing articles about them at some point. I'm so slow at this, but I can share it here first. Maybe it'll help me think of how I want to talk about this. But it's just some of the things I've seen at the events that I thought were really interesting, and you see a lot of vaporware stuff. Like I think I shared with you I took a picture of Bitcoin L2. I'm not going to name them, but some of the language that they use on this board, like their main thing, was just like it's just like techno mumbo jumbo that just seems like vaporware, you know. And you see that a lot. Anyway, so in DeFi, I saw a really cool product that was bringing fixed interest rate products to market. You know, most of the lending, all of the lending protocols, basically, Aave,
Are variable.
they're all variable interest rates, and those can really get you if the markets turn down or this, that, and the other. And if you look at traditional finance, fixed interest rate products, right, are kind of the backbone of the financial system because of their safety. You know what you're getting, and you know for what the duration, right? It's like 1, 3, 6, 12 months, 5, 2 years, 5 years, that kind of thing. Basically, you're thinking the sovereign bonds, treasuries, and stuff like that are your kind of premier fixed interest rate products, and then you have I would say under that, like mortgages, fixed rate versus floating. Again, fixed rates are so much better, right? And DeFi doesn't have any of this. They don't have any kind of fixed interest rate lending markets or anything like that. And there are a couple things here. The first is major institutions don't really want to mess with floating rates, right? Because of the risk that can be associated with that, but also being able to term out when you borrow and lend is really, really important too. So you have two sides, right? The lender gets a known rate for the time, and then they can get their collateral back after that, and then the borrower also knows when they have to return it, and they also have a fixed rate for that. I think DeFi needs some things like this, because really who should be buying DeFi are institutions, right? Retail doesn't, I don't think, really have. It's not sexy, and as we've talked about, the gains, those crazy gains, the meme like 100x's, not really gonna really see that, I think, right? So it's less sexy for retail, but it is really appealing for people who have a shit ton of money and they want slow, safe, known returns, and they know the risk profile and stuff like that, you know? And then the second part is, I was talking to this guy who is making one of these products, and this is a little bit above my head, but in traditional markets, you have a what's it called? You have the interest rate curve, right? So basically, your fixed interest rate products, your sovereign bonds, they kind of are the foundation of the whole system, and then it's it's your risk-free rate, basically, and then everything that's offered in any kind of lending sense off of above that, like a mortgage, is based on some additional risk off of the risk-free rate, right? So if your risk-free rate now, I think in the US, like was it 10-year, 30-year is like 4%, 4.5%, 5%, then your mortgage is going to be 2 or 3% on top of that, right? And then credit for what's it called? For businesses, what is that called? HYG. Gosh, I'm so stupid with this. But then they'll tack on another 2, and it'll be like 11 or 12%. And so you get this nice curve, and everyone knows where they belong and how to rate their product off of that. And DeFi has nothing like that, right? Because we just have these weird variable interest rates, and so it makes everything kind of not stable. And so you can't really see a lot of money getting into the system. And I found this idea of having a yield curve. That's what it is. Yield curve, really, really important for getting a lot more money and liquidity into DeFi. So I thought this was pretty exciting from I love DeFi, but it's been languishing, right? It hasn't really gone anywhere. And I think that products like this.
So, I mean, how could you establish a yield curve? Would it be that the risk-free is the whatever the Ethereum staking yield is?
Yeah.
And then the curve is above that?
Yeah.
Or off of that?
Yes. Well, so that would almost be below this, because even if you look at sovereign bonds, it's a borrowing and lending, right? And the Ethereum thing is not really, it doesn't really fit into this model cleanly, because you're not borrowing or lending something. You're basically getting this mission. It's more like a issuance. Yeah, it's more like maybe a tax on the system, right? It's like a system tax.
Yeah.
This would be issuing debt, right? The yield curve is about debt issuance, right? So
yeah,
how you would get this is basically, and it would take time because it's not as clean. I mean, it basically what happens with like the U.S. bond market, for example, is you have some government or whatever, they set a rate or they set a target rate, and then the market can kind of undercut that or go over it, and that's what you see happen all the time, right? And how far that goes above or above or below it, then that introduces a lot of instability in the system, and you can have things that like the crashing of bond markets. But basically, I think the DeFi version would be, you'd have some platform, and then people would auction different amounts of money for different rates, and then they would you would by having bidders and what's it called? Yeah, different bidders on each side. You would kind of hone in on a market rate, and I guess it would have to be above whatever the Ethereum rate is, right? If it was on Ethereum. So that would kind of maybe make it a baseline, but this is still slightly different because it's about borrowing and lending money. But yeah, basically these products are being offered, I think, in 3, 6, and 9 months, or 3, 6, and 12 months. Different bonds, and you'd let the market kind of decide the rate. So it would be, it'd be a little more. There'd probably be more volatility than traditional markets, right? But it would still be better than what we have now, which is you have no idea what the interest rate for lending is going to be 1 month from now at all. I don't pretend to know all the details of this, because the guy I was talking to is super smart, and I didn't have much time to talk to him. But I think this kind of thing would interest institutions who want to deploy any kind of money, right? And what is DeFi's market cap is tiny, right? The amount of money that's sitting in there. So
you mean the total value locked in Bitcoin in
yeah,
DeFi,
or
of DeFi?
not even that. Let's say the total value that's lent, right? So not even locked. If you just looked at lending markets, borrowing lending market, how much has been lent out? Check. Borrow aggregator. Oh no. Anyway, I thought this was pretty exciting, and I hope that these kind of projects do well. I'll be writing about one, and I had an interview with one. I don't want to name it right now, but very cool stuff. And I think it's kind of the boring, unsexy stuff that really could be very important. And if it has traction, you could see some of these, because you would just see this flood of liquidity into DeFi, right? If bigger players stepped in, like was it BlackRock?
And how would that benefit the crypto industry if there was a flood of liquidity into DeFi?
Basically, it would be safer and easier to borrow money, and the interest rates would presumably go down and be more stable. And what are you going to do with that money? You're going to buy things probably within DeFi or within crypto. So more liquidity means more money going into other assets of the crypto complex. That probably.
So you're saying it'll probably
pump your bags. Yeah, they'll probably what I would do, or what I'd imagine is, let's say you want to be super safe. Some bank puts in a tiny like 0.5% of their balance sheet onto this platform to get a nice yield, right? And it's relatively safe and all this kind of stuff. And then they lend it. If someone wants to borrow it, why don't you just borrow it and go lock it up with some staking thing or something like that, depending on where the rate is, So anyway, I don't know. That's what I imagine happening.
Yeah.
In my stupid brain, basically, it's like more liquidity, more gooder. Nice. All right, a couple more things. Sorry, let me just go through these quickly. RWAs, we've all heard about RWAs. We've talked a little bit about other RWA products. I was very surprised to see this come up several times in Taipei. Obviously, it's close to China, so their needs are slightly different than like the U.S. market. And there was a lot of talk about on this RWA side about supply chain loans, basically, right? Issuing short term.
Yeah, this has been a topic. Yeah, that has been bandied about in the blockchain, not Bitcoin world, the enterprise blockchain world for a long time, right?
So apparently now these protocols are coming online, right? And they're giving basically, at least in my layman's terms, they're basically giving like short-term loans to different supply chain pieces, right? Where their access to
based on the you have an order, so you can get a loan based on the value of that order to cover you until you actually get the payment going through, for example.
But it's a little more not nuanced, but it's more specific than that, because they need dollars, right? Because we're talking about Chinese. Basically, a lot of these companies are kind of targeting Asia and a lot of these manufacturing centers, right? And so they all want dollars, but they don't. They have difficulty getting access to dollars, right? It's more difficult for these Asian countries to get dollar liquidity, and so they might have the money available in their local currency or in another Asian currency like yen or renminbi, but they want to transact, or the different supply chains need to transact in dollars. So let's say they get an order for a shit ton of something, and then they need money to go to. They need money to then get the pieces of the thing that they're going to assemble. But the company that they're talking to, they want dollars. They don't want their renminbi. so they can get a short-term loan on this kind of thing. And so basically, some of these RWA projects are providing the dollar liquidity to this in short-term aspects, and they're making some kind of RWA product that gives a juicy APY. Again, further out on the risk curve, but potentially a lot more lucrative. So I thought that was pretty interesting and a very specific kind of important manufacturing niche. Yeah. I had a couple more, but I'll forgo that because I think we're running out of time.
Yeah.
Any thoughts? You seemed underwhelmed.
Yeah, it's not sexy. So
yeah, very unsexy, and more, I think, B2B kind of stuff. Although you could speculate on the RWA stuff. I think a lot of it comes down to.
Yeah, actually. Yeah, I heard a really interesting discussion the other day. So what we're seeing kind of this cycle is instead of 0 to 1, a 0 to 1 innovation, like with the last cycle, we saw, DeFi summer, where we went from not having DeFi products to suddenly having DeFi products, and NFTs, same thing, right? Not having them to having them. Now we're not really seeing that in this cycle. We're not really seeing a 0 to 1, but what we are seeing is products that were proposed a long time ago, like 2017, like all these, here's what we can do with crypto. They already were from 0 to 1, but now they're going from 1 to 100. Like, and an example of this would be Polymarket. So Augur was a prediction market that was incepted in probably like before 2017, but I remember it from that cycle. And now it actually, in the form of Polymarket, it works, and it's like the global prediction market. And a lot of people who are using it probably don't even know that it's like, or a lot of people who are talking about it don't necessarily even know that it has anything to do with crypto. It's just like, that's the prediction market. And so I think some of these other things you're talking about, RWAs and fixed interest rate products, these were all incepted a long time ago, but now we have the infrastructure in place, and the teams are finally starting to execute on these
real
things,
teams,
and we're getting
real teams.
We're finally starting to get products that work in the real world, and we're going from 1 to 100. So maybe this cycle there isn't going to be that 0 to 1, but we're just going to get this, like, finally a product market fit on some of the pie in the sky things from half a decade ago.
Yeah, I haven't heard this, but that does resonate with me. I think, like, I always think about the IoT stuff, right? The crypto IoT.
Yeah.
And now you're actually getting real stuff, right? Like what's it called? Helios, right? Helium. And was it geodata kind of stuff? That kind of, I mean, and it's legit. It's being done by people from Web 2 with decades of expertise in that space who have come over and like, oh, I can do something with this. And it's completely not sexy because, they're these very, very important, but kind of B2B focused applications, and they're more slow moving.
The crypto space is maturing. It seems.
So
yeah,
no more. Well, I mean, we're still getting 100x's and like meme coins and stuff, but yeah, I can imagine like this fixed interest rate, like fixed interest rate products. I don't even know if they have a coin. To be honest, I don't even.
Yeah, exactly.
So yeah.
So what's the
What's
point?
the point? Exactly. Yeah.
Yeah. All right. Shall we wrap it up?
Yeah, let's
David?
do that. Let's wrap it up. Show and tell. Hold on. I want to do just one show and tell. Could you do that first one? I say crash caused by Japan.
Okay.
I thought this was hilarious. Maybe it's only me, but it's about Japan, and I live here, and I thought this was pretty funny.
The
First one under show and tell. Yes, that's it. Right. So I don't know if you are familiar with that meme that's been going on for this past year, but it's like something normal in the West, and then the same thing, but in Japan, and you get the guy who's super happy about it, right? So that's been going on for like a year, right? Like McDonald's, it'll say McDonald's in the first panel, and then it'll say McDonald's in Japan, and they're like, oh, and you would see that online, right, all the time, of all these dorks and dweebs and nerds coming to Japan and like freaking out over things that are actually normal, not particularly special to Japan. Anyway, so this was during the market nuke.
Yeah.
So I thought this was pretty funny. While the world was exploding with the yen thing, the yen unwind. Anyway.
Yeah, it's pretty good. Big fan of Wojak. This is Wojak, right?
Yeah.
First comment, gay sex. Not sure why, but okay. All right.
Oh man.
On that note, let's wrap it up.
Yeah.
Let me just find our outro song. Thanks to everyone for joining again. See you next week. I think Corbin will be back next week, and hopefully we'll get some guests in here pretty soon.
Yeah, hopefully something about
everyone.
Bitcoin L2s or something, right? Like that'd be nice.
Yeah. All right. Okay. I'm out.